there's only about 80 companies reporting this week, so it kicks off third quarter earnings season a little bit on the quiet side, and everybody will be watching those big banks. There's still a lot of other companies amongst the 80 that are worth your time checking in on. Some have great charts where they're trying to break out. Some are still struggling, and so it's interesting to see what these companies are going to say this quarter, how they're recovering from the pandemic, and where they go from here. And will anyone give any kind of guidance going forward? It's been slim pickings on the guidance front, but what are the 5 stocks I've brought today? You might be interested to see some of these, and let's find out what they are. The first one I wanted to highlight is Walgreens Boots Alliance. WBA is the ticker, and I'm highlighting it maybe for the wrong reasons, but if you're a value investor, maybe for the right reasons. As you can see on this chart, it is at 5-year lows, and there's not a lot of big cap stocks you can say that are still at the 5-year lows, because a lot of them might have hit that during the coronavirus sell-off in March and April, but then it's rebounced off of it. Even the airline stocks have bounced off their lows. This one is still heading down. So that's why value investors are starting to snoop around as to thinking, hey, maybe there's something going on here I should be paying attention to. It is coming off a fairly sizable miss last quarter, and it is still having some difficulty rotating in the Aetna acquisition. Remember, they own a big health insurer now, that's CVS that owns Aetna now. Walgreens trying to compete against the big health insurers and all of that as well. Although I've been going to get some of my flu vaccines and whatnot at Walgreens. They just reported that they're having a surge in flu vaccinations more than they've seen in prior years. So that's a positive. You get people in the store. Hopefully, maybe they're buying some other stuff in the store. Walgreens is also rolling out a new rewards program. Not sure what that's going to entail. We're going to get more details, but that's coming at the end of this month. And some rewards programs have been known to be quite lucrative for some companies if you do it right. So what are they going to do with it? That's going to be one of the big questions too. So Walgreens Boots Alliance, you might want to tune in again if you're a value investor and see what's going on here. So let's turn over to the medical side, Intuitive Surgical. This is one of my favorite charts every earnings season. As you can see, just the 2 misses since our data began there in 2017. And the shares had that pullback during the coronavirus sell-off and now have resumed their upward trajectory again, hitting these new 5-year highs here, trying to break out ahead of this report. Now, remember, their revenue did take a hit during the pandemic shutdown because the medical procedures were put on hold across the country, but that is reopened now. So Intuitive is, back to selling its Da Vinci systems and all of that. And things should be turning around for them globally again here. And that's probably why the stock is, back to new highs. So this is definitely one on the medical product side you're going to want to tune into. Switching back over to the downward slide again, and that's with Schlumberger. So I said Walgreens is one of the few at the 5-year lows. Well, Schlumberger is trying almost to get back down there, not quite though. And the whole oil industry is having a lot of difficulties right here trying to stage any kind of recovery. These shares are still pretty cheap, and some insiders have gone in to buy in recent weeks here. Is that a sign that they feel that these have finally bottomed? They have been buyers over the last couple of years, so they haven't been the greatest at picking the bottom, but they're staying consistent and still buying into those shares. Schlumberger has a great track record of beating. They always manage that, except for that one miss back in 2016. So you do have that going for you, but the sector is just really struggling here as the global economy is trying to, ramp up demand again, but it's still going to be some time before that happens. Then we're going to switch over to VF Corp. Now, VFC is the ticker. This is on the retail side, and VF Corp owns a couple of key names like North Face, Timberland, and a couple of others. And as you can see, these shares are recovering off of those coronavirus lows. They put together 3 beats in a row here, And they've done some strategic corporate changes to get rid of some of their kind of legacy, slow growing brands and really emphasizing these more high growth brands. And so this will be interesting to see kind of what happens on the retail side. Apparel's been very difficult during the pandemic in certain areas, but VF Corp does have brands that are in the kind of leisure, athletic leisure area, which is hot right now with everybody staying home. And additionally, a lot of outdoor activities going on. People might be investing in the North Face brand and some of their offerings heading into this winter season. So this is going to be one of the earliest of the big retail brands that we're going to see report. So a lot of people are going to be tuning in. I will be one of those as well. And then we're going to finish it up with the transports, but not the airlines. The first of the railroads will report, and it's Kansas City Southern. Now, they've got a great track record, also going back to 2017 here, with just the 2 misses there in 2018. They've strung together this nice earnings streak all in a row, and the shares surging to new 5-year highs here after there was that talk of that VC buyout, possibly that offer, which apparently they have rejected. So the rails are looking a little hot here as maybe, acquisition opportunities. And while the economy is still recovering, freight has been strong. A lot of online orders, a lot of things that need to be transported across the country, including autos. And Kansas City Southern, remember, has the rail lines in Mexico. So they have a big Mexican, with autos and various other things. They have big Mexican exposure that none of the other railroads have in the U.S., except maybe Union Pacific with some of its connectors along the border there. But they don't actually have any rails in Mexico like Kansas City Southern. So this is one of my favorite of the railroads, and I'm going to be tuning in because this was a hot sector last quarter, and I'm expecting another one here, and it better be with these shares near highs. So as you can see from these charts, there's a couple near the 5-year low, there's a couple near the 5-year high. That's what's going on in the economy out there right now. And so we're going to learn a lot this week, even with only 80 companies reporting. And it's really going to heat up next week and the week after that as we start to get FANG, a ton of the tech names, and just hundreds of S&P 500 companies all coming at us. So you don't want to miss a single episode of the Earnings All-Stars. I'm bringing you all the action with all the great charts. You'll see who's the best, maybe some of who's not the best, but who you should be watching all throughout earnings season. Subscribe at our YouTube channel. It's on Zacks.com/YouTube. You can find us over there, Zacks Investment Research on YouTube. But I'll see you again next week with a bunch of earnings charts.